Yo, what is going on, ladies and gentlemen? In this video, I'm going to be going over how I discovered iFVGs. And basically, the answer is like ICT, but it's not ICT. It obviously started with ICT. And, let me just give you backstory. Insert sound effect. Okay. So it all started when I started with options. I was on profitable options. And then it all started with my buddy's like, oh, watch this ICT mentorship. He's making it for his daughter or something when she's older. I'm like, okay, whatever. It's kind of weird to me. And then I started watching. He sent me the 2022 mentorship. He's only out with like 2 episodes or something like that. So he obviously was still uploading the 2022 mentorship. And I learned the 2022 model. And I used the 2022 model for a while. Okay, it was a good model, and I didn't like struggle with it. Like I was semi profitable with it, but every single time I got wrecked, I really got wrecked. And I remember thinking, I'm like, what if I wait for the 2022 model to fail and then kind of see what happens? And I didn't really discover iFVGs at that point. It's almost like I just used them, but because ICT never introduced the term, I'm like, oh, it's just like I'll just take the broken fair value gap. That's what I call them. And then, I think one day it was like Twitter Spaces. He mentions inversion, and it was inversion something else. It wasn't inversion fair value gap. It was just inversion. I'm like, wait a minute, I'm using inversion fair value gaps, and if you just take a look at this chart right now, I'll just show you guys. What I do is I'd be like, okay, well, I'm gonna look for a 2022 model. If it gets wrecked, I'm gonna short it. And what I used to do, or I used to long it, right? It just depends on if it was long or short. And it all started with something like this. So let's say we got the 2022 model, like this. I'm like, oh, we have a market structure shift here, right? And I'd be like, oh, well, this just got wrecked. I'm gonna long. And I typically did not long the close. I used to like long like this, and I used to put the stop loss in the low. Like that's what I used to do. And then I remember one day I was listening to a Twitter space or something. I don't know what it was. It might have been a video. This is where it gets a little like foggy. I remember ICT said SIBI, sell side imbalance, buy side inefficiency, and he drew a fair value gap from like way over to the left of his chart. And it did not make sense to be an inverse. I'm going to be honest. Like, he drew it, and it was disrespected so many damn times. Like, and he's like, oh, yeah, this is a SIBI. Use it on the buy side of the curve now after it's using the sell side of the curve, whatever. And I'm thinking to myself, I'm like, wait a minute, that's what I have been doing. And I'm like, but why is he drawing a fair value from a day ago if it's already disrespected, then respected, then disrespected? Like that, I didn't understand that, okay? And that's when I discovered it. That's when I was like, you know what? I'm going to take the time. I'm going to go in FxReplay. If you guys don't know what FxReplay is, it's just a backtesting software. Okay, it's, just this. It's a really good backtesting software. I've backtested on before. And I go in FxReplay, and I'm like, okay, how can I make this into a model? And I'm thinking, well, I just take inversion SIBIs from the left. And I tried it. I tried to mark out these, and when I first started taking iFVGs, I remember I used to try to short the ones that were like from over an hour ago. So I'd be on the 1 minute time frame. I'd be like right here, and I remember I'd try taking shorts like this, and that's where I started to take the close. Keep in mind, I still stayed the stop loss the same, but I'm like, yeah, there's probably a better way to do stop loss. I just haven't figured it out yet. So a lot of the first shorts and longs I used to take off iFVGs were all off these iFVGs that were all the way to the left. Okay, and obviously, as I noticed, I'm like, these don't really work a whole lot, because I'd see this and I draw it because this is how ICT drew it. And one day I'm like, the way ICT uses this is not good. Like, I just realized that it's not good, because he used to draw these fair value gaps from like a day ago, and he's like, mark this. Oh, use it as an inversion. And then we'd go up, break it again, like this scenario here, and then we go back down and just whatever. So I'm like, okay, I kind of reevaluate. I kind of go back to the failing 2022 model idea. Now, when you look at like a 2022 ICT model, it usually happens right away, right? You're entering off of the same leg right? That gave the market structure shift. So I'm like, okay, instead of marking the fair value gaps that ICT is marking from way over here, what if I wait for like the recent ones in the 2022 model to fail and then take that one? Meaning I take the same one that forms in the leg. So I'm taking this one now. So I started backtesting that. And I had way more success in that, or with that. So you can see right here, I remember this was my first times, like I saw something like this. I'm like, okay, dump candle here, looks like a 2022 model. And I was like, okay, let me just see what happens. Skip a few candles, boom, it broke. And I longed. And I'm like, okay, well, where did I target? I guess the next high. I just kind of picked out random highs to target. And I started using iFVGs just from backtesting and experience, just from like, okay, I noticed that the ones closer, right? The ones closer worked much better than the ones if you marked them way, way far away, right? Because these are, to me, it's like, to me now, I think this is invalidated. But I started using these ones closer in proximity. That's what I call it, proximity, right? The ones farther in proximity, I kind of realized did not work that well. So I started only taking entries that were the failed 2022 models off of these inversions. That's literally all I did. And me and my friend DC, I text him all the time. We kind of had the same idea, because I remember we were texting about how like, oh, this 2022 model get wrecked. And then I remember like, it's like, why? Well, why don't we reverse position, you know? And some of the 2022 models that got wrecked would not do well if you reversed them, but some would. And I quickly realized, I'm like, the ones that got wrecked are the ones with obvious fair value gaps that get wrecked too. You know how like sometimes there's like a 2022 ICT model where there's like a market structure shit, whatever, but then the fair value gap's almost like tiny. It's like, it's not that good. Those are the ones where I noticed we'd go above, we'd wreck the 22 model, and then we'd go down. Like we wouldn't take out the high. And that's when I'm like, okay, maybe one of the rules I can add is taking those obvious fair value gaps. So like this, you know, this looks a lot more obvious to me. So I started being like, okay, I'm going to take a failed 2022 model. It must have an obvious gap, and it must have like some sort of liquidity sweep or whatever. So I kind of was like slowly progressing through like kind of figuring all this out. And a lot of it was just due to like watching the market and trying plays like exactly what I'm telling you. So at this point in time, this was probably like 2020, late 2022, probably like December 2022, January 2023, which is about 2 years ago. And I live streamed. I was a signal service. I alerted a lot of plays in Discord. And I didn't really, wait, I did say live stream, but I don't think I live streamed that much. And I was using mainly like footprint charts and stuff. And then I'm like, you know what? I'm just going to take these failed 2022 models, because I noticed they had a lot higher success. And I tried breaker blocks. I tried order blocks only. And I'm like, you know what? The failed 2022 models, I tried everything. I felt like they did the best. And it might not be that way for everyone, but I felt like it was the best way for me. So I started taking the failed 2022 models. I backtested breakers. I backtested order blocks. And to me, that had the highest win rate, highest RR. Like, not highest RR, obviously, but highest profitability. And then from there, I literally just like experimented with, okay, where should I be taking TP? Where should I be taking stop loss? And one of the first things I noticed outright was if we closed back above the inversion, then it would often fail and go to the high anyways. So when I would enter, right, I'd enter here, right? This is replay mode. I'd enter here, boom. And if we ever close back above, I remember like thinking to myself when I'm going to trade, I'm like, damn, we probably don't want to see a close below than above, right? That's more choppy to me. And I backtested the stop loss there versus the stop loss at the high. And I noticed that every single time I got stopped out at the high, it would always close above. And that's where I was like, okay, I got to backtest a close above and see if this is better. And indeed, I backtested it, and it was, right? I just started using the close above, and I would get out if we close above instead of hitting the high, because I did so much backtesting that I realized, like, okay, whenever we come and this fails, we're just going to go low anyway, so why not stop out earlier? And it was really just trial and error. And I had a lot of success using this. And for about 3 months, I never really taught this on Twitter. I only used 2022 models, or that's what they thought, right? Every 2022 model I posted actually had an iFVG, but I just didn't show anyone. It was kind of my like secret sauce at the time. And I remember at the time I used to think like if I shared my iFVGs or shared any strategy, I remember thinking that, um, oh, if I share the strategy, it's gonna suck, right? Because everyone's gonna use it. Little did I learn now, that's just not the case. So it really all started with that. I kept it for like 3 months. Right? No one on Twitter using iFVGs. All right, and if they did, I remember it just they'd marked some fair value gap from like a day ago, and it just wouldn't even matter. I'm like, why? I was confused. I think people were just didn't know how to use them at that point because ICT never really taught them. And I, from backtesting and trial and error, I had already figured out, okay, got to be close in proximity. Got to be like an instant V shape. It doesn't have to have a BPR, right? It doesn't need to be BPR. It could if it is. If it is, great. If not, whatever. I'm like proximity, obvious, close, liquidity sweep, 2022 model fail. That's all I was thinking at the time. And those entries were just working so much. I'm like, dude, I can't share this. Like, this is so easy. And it was like a cheat code. I legitimately thought, I'm like, bro, like, how do people not do this? How does ICT not show more trades of this? And I remember going back in ICT's trades and mentorships and videos, and I realized after watching mentorship the first time, a lot of his trades did actually have iFVGs. And I'm like, okay, maybe ICT does use these, but he doesn't teach them. I wasn't really sure. But a lot of the iFVG trades he'd take were just, they were terrible. They'd be these random iFVGs from way over here that weren't even like, they're broken and, failed so many times. And I'm like, I guess he made him work in whatever way he thought was good. Okay. Which is fine. But I just kind of had that rule set, proximity, close, obvious, liquidity, boom, that's it. And then I would figure out price targets. I'd figure out, okay, I'm just going to target unfilled fair value gaps and all highs and lows. So like I target here and then I target this high, right? Because that's what I would learn in ICT, right? Where does the market draw to? The market draws to unbalanced fair value gaps, or in other words, internal range liquidity and external range liquidity, like this, highs and lows. And it was all a process. And like, when I was doing this, I was not sharing it. I just couldn't. I thought this is too easy. I was making decent money, whatever. And even my closest friends, I didn't tell them I was making money off this. I pretended like I was losing money. And some of those people, they still don't know that. Like, dude, I thought that I was like, never have to do anything again. I thought I was just going to be set using this. And I finally started sharing them on my Discord, and I remember I tweeted one time, I'm like, by the way, I'm like, try using the opposite of a fair value gap when it breaks. And I did a little winky emoji. I didn't really explain it because I'm like, I don't want to explain it just yet. Because I was still kind of figuring out like TP, just like different conditions. It's like, oh, do I wait for the ones that take 1,000,000 hours to inverse, then take them? I was just kind of still figuring that stuff out. And in order to figure that stuff out, what do you have to do? Well, you have to back test or you have to forward test in live time. So I was kind of going through that process and figuring out, and now I figured it out so much that like someone could ask me, oh, what is the answer to this? And I'll tell them based off of what I've seen. I'm like, and I tell people, you can back test based off of like my strategy, but I've already pretty much done the back testing for people. That's why I'm already so successful, because I've done the back testing for you guys. You guys technically don't need the back test if you watch my videos. You just need the forward test. The only reason I'd back test is if I found a whole new different strategy and no one ever taught it and no one knew what it was. But I've back tested this for the whole community, the way I've taught them, using close and proximity, the obvious ones, not the tiny ass ones, right? Like the singular V-shaped ones, those are good. If we chop and then all of a sudden, boom, we go above with a giant momentum candle, we have like mini low resistance liquidity above, like LRLR, something like this. Like just the way the community has used them and the way I've kind of talked about LRLR, data wicks being really good at pools. I back tested that and watched all 4 people and did the work for people. So now the whole comm uses it, and it's crazy how many people like just use this and they learn it from a mentor, and they probably learned it from someone who learned it from me. It's just because the way I teach these is super unique, and I never taught them for like 3 months, and no one used them until I taught them like this. And it's just crazy, like the the community now. Everyone uses them. I'll even go on my TikTok page. I'll see like Germans using these like the way I do, right? And it all started with ICT marking those random ass ones like just way back here. I'm like, bro, why would he be using this? And I still to this day I don't know why he marks these. There's just no point. It's disrespected. I want to see something close in proximity that I know is going to be like super bearish orders here and all of a sudden inverses, right? What happens here? Well, it's just literally smart money getting stopped out, but it's a signature and price that almost, it's a pattern that cannot be faded because there's so many orders just reversing here. And the way I just learned that and picked up the signature and price is just insane. Now, you're probably wondering, oh, dodgy, but there's all the time these candles where it's like, look at this one right here. Oh, but all the time we have a big red candle and then a big green candle. Yes, you do, but it's not the same signature and price that ICT teaches with an actual inefficiency. This is where the algorithm comes into play, and this is why these ones are important. And you just have to like take a visual note of like this right here, and this is the true algorithm. Like this is like moi, chef's kiss right here. Right, this is the real deal. And when I learned that, I'm like, okay, I'll start teaching it to my private Discord because I wanted to be transparent on what I was using because I didn't want to like lie and say I wasn't using 2022 model anymore. And quickly started teaching it, and then I saw a lot of other mentors, a lot of other people that learned from me, like, or didn't learn from me. They actually didn't learn from me. A lot of people on Twitter who never really learned from me, they started seeing what I was doing because they started seeing all my posts and all the trades I was taking. I know like Hydra used to use breaker blocks a lot. You know, I'm not gonna call people out, but Hydra I haven't blocked. He's that dude is a scam artist. That's all I'm gonna say. Good trader though, obviously. But like Hydra and so many other people started catching on to my charts. And I remember Hydra DM'd me one day. He's like, yo, like let me do a picture of this inversion. And I'm like, okay, cool. I saw you use breakers. And he never ended up doing one. And months later, he started using inversions exactly how I did. You know, exactly how I taught. And keep in mind, ICT never taught how I use inversions. I did it. I backtested this. I figured out the proximity, the obviousness, the, you know, looking for an SMT would obviously make a high probability. SMT is like, that's something ICT did taught, but I just added it as like influence, I guess. So I'm not really... I definitely didn't invent like, oh, look for a SMT and an iFVG. That's like common sense if you watch ICT videos. Anyone who looks for like, there's people out there now calling these inversion models like these random ass names like, oh, this inversion model signature by me. It's a V-shaped recovery into like a 5-minute gap. Bro, that's literally what I teach. You're just making up some random generic, like you're just, what they're doing is, all they're doing is they're just getting one specific scenario and calling it their name, you know? iFVGs or iFVGs, it's the way ICT taught. Obviously, I formed my own model out of them in a much better manner, in a much better way. And there's lots of different scenarios you could take. You could take an iFVG up to an unbalanced 15-minute. You can take an iFVG up to trendline liquidity. You can take an iFVG up to equal highs. It's all the same. It's just, so these guys making all these names for this is just, it's hilarious because, yeah, it does help for branding, but at the end of the day, like, it's all the same. And it's just crazy, like, you know, the journey that I've seen and I've grown up in the community, because I've left so much of an impact with how people use this stuff. And some people, I was on a Discord the other day and someone was like, oh, you didn't learn this, or you didn't teach this. I'm like, bro, I literally taught your mentor. And they're like, no, you didn't. I'm like, okay. So I just gave up. But it doesn't matter at the end of the day, but it's just crazy because I popularized this and all my posts on Twitter caused Hydra, like so many other people to start using them. And they're like, you know what? They got FOMO. They started using them. And it's not even that. It's the fact that I posted the same setup on the chart every day. And I remember like people who didn't even like, you know, mess with me before, what would happen is they'd see the same signature and price all over every single day on my Twitter. And it almost like they learned from me without even knowing it. They would be like, okay, I've seen Dodgy this trade 50 times. And when they see that on Twitter, their brain the next day, because this pattern or this signature and price repeats every day, what would happen is they'd go on the chart the next day and they'd be like, wait a minute. And their brain would make a connection. They'd be like, wait a minute, I've seen Dodgy's Twitter post for the last 2 months. This looks exactly what he's taking. and then they'd see it work and they're like, wait a minute, this is actually pretty easy. And they wouldn't take it. They'd be like, okay, I'm gonna still keep doing my stuff. And then months go by and they're like, they're seeing this all over the place now. Now they're like, you know, they're taking the unicorn model, but now they're like, okay, maybe I'm gonna add some iFVGs. The way Dodgy's showing on Twitter is actually pretty good. And that's how it all started as well for all the other mentors teaching this. And then it just become a train reaction at that point. So like that's how it basically started. So it's just crazy, like the amount of like transition. I didn't teach these, then I did, then other of my mentor friends started using them, and then like I'd post them so much that like I'd ingrain them in the people's brains, and by accident they'd see one in the chart, then they'd be like, wait a minute, I've seen that on Dodgy's Twitter before. Okay, I'm not gonna take it, but I'll watch it. You know, it could be interesting. Okay, 2 weeks go by. Dude, I've seen this so many times, I gotta start taking these setups. Okay, 2 weeks go by. Yeah, I'm just gonna make this my model. This is just too easy. Right? So that's basically what happened. And that's what happened for me too. Right? That's what happened for me. I went from the 2022 model. I was like, this is too easy. Backtested, created my own rules, did like the close above as a stop loss. And I just figured out all this stuff in backtesting, did the backtesting for everyone basically. And what I use now is just everything I just kind of formed with my own model. And now everyone pretty much uses it, or at least most of ICT now, like Twitter. And I'm glad that, I'm glad that no one's using those random fair value gaps like ICT used to mark out. Like, I swear, he'd be like, oh, mark the 114 fair value from the other day. And how is this useful? Just how? I don't get it. And you can actually see my camera did just die, so I'm going to turn my face cam off. But I think that's a sign to end it for the video. That's pretty much how I learned inversion fair value gaps, and just kind of how I didn't create them, right? There's a different term between creating a fair value gap and creating an iFVG versus, oh, I created the model, right? So I didn't create inversion fair value gaps, but I created the best and most efficient way to use them. And to me, I'm happy with that. So that's going to be it for this video. If you guys are trying to get into trading, I would definitely suggest watching my bootcamp. It's literally just it's in my strategy playlist. It's called my bootcamp. I would definitely also buy a few 50K accounts on Apex. They're probably running a sale right now. I'm not sure what the percentage is going to be at the time when I upload this video. But if you're interested in getting like a 50K account, if it is 80% off, you can get like a 50K account for like $36 or something. And they're just a really good practice to like test your knowledge on. And, if you're trying to get into trading, I'd definitely use those and not like live money yet. But that's pretty much it. And here are just some examples of a bunch of testimonials, a bunch of profits, and just a bunch of successful students where they put in the work and they become profitable. And, all these guys are living the life that they want to live. So with that being said, here's just some examples. And if you are interested, I do upload on YouTube for free, but I did just start a one-on-one mentorship where it's very, very private, very personalized. It's got a lower acceptance rate than Harvard. I have denied a lot of people. But there's only, I think, 16 or 15 spots left at the moment. And my favorite part of the mentorship, which you can apply at the link below, by the way, is an accountability program. So basically what I did is I created this accountability journal, okay? And I put 4 students in a group, and I basically had them meet once a week where they are going to be accountable for their actions, show their P&L, and just overall make sure that they have partners to keep them in check. I also have a ton of quizzes and exams throughout a bunch of coursework, but that's pretty basic, even though a lot of other mentors don't do the quizzes and exams. And overall, I just get a call a lot, give some people my phone number if you really need it, and I'm very accessible, and I do 2 classes a week. So if you're interested, it's totally free to book a call. Just click the link in the description, and I hope I can see some of you. And for the ones who get denied, just remember, my YouTube is free. Okay, you don't need to pay me to become profitable. This is very private, and I'm uploading videos for free for a reason. I don't want your money. Okay, but this is for people who are going to be dedicated, work extra hard, and people that I want to spend my time teaching who won't waste my time, that I know has a strong chance of becoming profitable. That's it for this video. Don't forget to use code Dodgy for an Apex account, and I'll see you guys in the next one. Peace.